more on the impact of these tariffs on the global market. I'm now joined by Shane Oliver, who's the chief economist for AMP. Very good morning to you, Shane. This is the second day of market chaos that we're seeing. Of course, we're seeing the investors fleeing from the markets, heading towards government bonds and gold as well. What are you reading into this?
Well, I think what you're seeing here is markets reacting to the extreme uncertainty that's being posed by these tariffs. They mean weaker economic growth globally. Obviously, the US is at the centre of that, given the hit to confidence there and to supply chains and so on. Obviously, there's also a flow on to Australia from all of this. And markets don't like uncertainty. And, of course, that's why we're seeing these very volatile movements. The big fear after President Trump's announcements on Thursday, our time in Australia, was that there would be retaliation. Of course, we've seen that now with China. And that, of course, just adds to concerns that other countries will retaliate, and then you'll get counter-retaliation from the US. So all up, you know, we have seen these heavy falls. The US share market down 17% now from its highs. We're only down about 10%. And only reversing some of the big increases we've seen over the last couple of years, but it looks like we'll also be down again on Monday. So obviously the uncertainty will continue, and that's also, as you've mentioned, being reflected in currencies like the Australian dollar and, of course, the relative strength of gold. But bottom line is this volatility looks like it's going to go on for a while yet, because it doesn't look like President Trump's going to back down for a while yet.
Yeah, but interestingly enough, this is a president who watches the stock market very, very closely. This is a president who prides in the fact that the stock market thrives well under his reign, especially in his first term in office. So as he's watching these red numbers flash up on the stock markets, would he be concerned and then perhaps even capitulate to try to right whatever's happening?
I think ultimately he will. He does focus on the share market. He likes to say that it's been very strong as he's been president. And we did see in 2018, we had a year there of extreme tariff uncertainty, but nothing like what we're seeing now. We did see the US share market fall nearly 20% to its low point on Christmas Eve 2018. And of course, then he started to soften his tone a little bit and pivot towards a phase one trade deal with China. So I think there is a point where he will get nervous. It's just that we haven't yet reached that point yet. It obviously wasn't 10%, maybe with a 17% fall in US shares, we're getting closer, but time will tell. But there will be a point. The other thing that will put pressure on him is Republican politicians. We did see 4 Republican senators cross the floor last week to vote with Democrats to reject the tariffs on Canada. And I think that opposition will gradually start to rise, particularly as consumers start complaining. Don't forget that a whole bunch of voters switched sides from Democrat to Republican in protest against the cost of living. Now they're going to see their cost of living go up. And those voters will start to wonder what they did and why they did it. So I think there will start to be pressure on President Trump, but it's a bit hard to predict precisely when that will come.
Shane, I want to turn the conversation back to Australia here. You did indicate that the Australian markets would probably open lower. How much lower on Monday in terms of reflecting the global concerns over what's happened so far? And also, if you could talk to us, who would maybe be the winners and losers?
Well, in terms of the decline, futures trading is currently down around 4.3%. So it looks like we're going to see a fairly hefty fall on Monday. In the last week, our market fell about 3.9%, almost 4%. Looks like we're going to see a similar size fall on Monday based on futures trading, which trades in parallel with the US share market. In terms of winners and losers in all of this, obviously, you know, there will be a hit to the economy. It's hard to know precisely how much. Australian companies at the front line here, which get hit by the tariffs, they're most vulnerable, you could argue. But in the great scheme of things, the US is not our biggest export market. It only takes 5% of our exports. The real hit to Australia, I think, will come via weaker growth in China and Korea, Japan, the rest of the world, leading to a broader hit to export growth in Australia. So that's the big thing to worry about. Not so much the direct impact on steel and aluminium and farming and so on. That's very negative and very horrible. But it's really the indirect impact which is the greatest there. So there will be losers there. There are some potential winners out of this, defensive stocks on the share market so far are holding up a little bit better, like healthcare, utilities to some degree, consumer staple stocks. People still have to go to the supermarket and so on. So they'll hold up relatively well. And I think there is potentially a silver lining to the Trump cloud here. We probably are going to see lower interest rates, and we're probably also going to see lower petrol prices because the oil prices also slumped in response to all of this.
Okay. Now, we saw that China slapped a reciprocal tax of 34% on US goods, of course. Talk to us about the wider implications of this, and particularly for Australia.
Well, the wider implication is the hit to global growth. This is a huge shock to the global economy. We've had 50 odd years, 50, 60 years, in fact, ever since the end of World War II, of generally declining trade, increasing globalisation. Donald Trump is reversing that in a matter of a couple of days, it seems here. The average effective tariff rate in the US is going above levels seen in the 1930s, reversing decades of declining tariffs and rising global trade. So that's a big hit to the global economy. The US is at the centre of this. They're the ones imposing the tariffs. They're the ones that will get hit by retaliation where countries do that. So you're probably looking at least a hit to the US economy of around 1 percentage points, similar amount added on to inflation, increasing risk of US recession. The Fed will be torn between those two things. I think for the time being, they'll be worried about the inflation, but at some point the Fed will have to start cutting interest rates. Sometime, I think, by the middle of the year. And then there's the flow onto the rest of the world. Not quite as bad because in the case of China, it's only their trade with the US which is being affected, not their trade with Europe or Australia. So there is a hit to China. There is a hit to Europe. Overall, it could take global growth down to around 2%,
right.
which is well below average. That means less demand for our exports. When you translate all that back to Australia, the Reserve Bank, I think, will look at it and say, well, there's not much here pushing inflation up in Australia. In fact, we might benefit from cheaper imports from countries that used to send products to the US, now sending them maybe to Australia. The real threat is to growth.